Hello everyone and welcome to Day Trader S&P 500. Today is Tuesday, November 14, 2023. This is Dale Woodson, editor of Woodson Wave Report and the YouTube channel Day Trader S&P 500. As always, we want to get our YouTube subscribers caught up with our newsletter subscribers. We had no fewer than 4 reports today for our newsletter subscribers. I want to start with the bigger picture here. This is the S&P cash index, the all-time high back in January. We have an A wave down that lasted Fibonacci 9 or Fibonacci 8 plus 1 months, 195 trading days. A B wave up, almost identical within a 1 trading day, and we're in a C wave down. From the C wave down, we've got within the C wave down, we've got a 1 down, a 2 up, a 3 down, a 4 up, and a 5 down for the larger wave 1, which is a leading diagonal triangle because this 4 overlaps that 1. Actually, I could put those in there for you guys. Let's get, I don't like how they make these so small, but we'll make it work. We got a 1 and a 2 and a 3 and a 4 and a 5. We'll move that 1 down, move that 5 over, change that degree of trend, minor. There we go. Okay, so we're looking at that C wave. There's the first wave down, 1, 2, 3, 4, 5, with the 4 overlapping the 1, which makes it a leading diagonal. Wave 2 up, you may notice right on the 786 retracement, and that's a theme of today. We'll show you guys more about that upcoming here. Okay, so let's get into the let's go from there to the daily chart. Okay, we want to show you guys this. That is from that 4607 B wave high back here. See that B wave high, 4607. That's the weekly. This is the daily. From there, this is an updated wave count. Let me get a full screen so we can see everything and get that more into focus. There we go, almost. There we go. Okay, we have a 1 down, a 2 up, 3 down on October 3rd, a 4 up on the 17th, and then a 5 down to complete the larger degree wave 1. This was a near direct hit on our Fibonacci target of 4100, hit 4103. And the key thing here is the gaps. Okay, there are no fewer than 6 gaps. Usually you get 3, but we got 6, and it gapped up again today. Again, you might notice this is right near the 786 retrace, or is it wrong if it goes above this 4607 high? Okay, so we have a 1 down in parentheses and a 2 up. We should see a 3 down. This 3 down should go below this wave 1 low, should close all of these gaps. Okay, that's the S&P daily. I'm going to get into the ES. Let's go into the ES weekly. I think I have it on here. And we do. There we go. The E-mini futures. Make that one big page. There we go. The same thing with the trading days. There's symmetry between wave B and wave A. By the way, if wave C gains the same symmetry, it'll be April if it lasts 9 months. Again, we got the A down to B up, and the 1, 2, 3, 4, 5 leading diagonal. 41, 22, 25 is that wave 1 low, and you see that wave 2 sitting right on the 786. And I don't know if I have that, that B wave. Let me see if I can do this here for you guys. I'm pretty sure, it's been a while, but I'm pretty sure that B wave was also a 786. Yeah, it's a little bit more than a 786. So you can see we got the A down in parentheses, the B up. This line here is a 786, so this B went higher than the 786. Okay, now this 2 is at the 786. I'm going to take that out so no one is confused. Okay, that's the ES on a weekly chart, and let's go to the daily. Okay, we'll get this into view here. By the way, there's a little bit of divergence between the continuous monthly contract and the December contract, which is the current one. One of them has a high on 9/1, that's the Dece contract, and the continuous monthly has a wave 2 high on 9/15. not a whole lot of difference there, but there is a difference, okay? Again, from the B wave high, which was a high at 4 degrees of trend, as you can see there, we have a 1 down, 2 up. There's that 786 again. Remember, the B wave was a 786. This 2 is a 786. We got a 3 down, a 4 up, 5 down here into the 1027 low, 41.22.25. There's your leading diagonal because 4 overlaps 1. The high of 4 is higher than the low of 1. And we have this huge move up. We had a trigger back here at 41.85. And honestly, this went higher than we thought. We had targets and it attained them all and then some, okay? But from that trigger, the market has moved up 335 points to that 45.24 high. You can see the 786 is less than a point away. So where is this wrong? We always ask ourselves when we're trading or when we're making a chart, where is it wrong? As 2 cannot retrace more than 100% of wave 1. Wave 1 began up here at 46.34.50. So that is the make or break for this wave 2. Okay, as we saw, that B wave did more than 786. So we got a 786 at the B wave, a 786 at this 2 wave, and a 786 at this wave. You see the theme here. The trigger for the downside is this wave 1 low. And there's an open gap on the futures here, just one, at the 41.3650 mark. That should be retraced. Again, futures don't usually keep gaps open for very long because they're open 23 hours a day. But this one happened on October 30th, and here we are on November 14th going into the 15th, and it is still open. So that should be retraced when wave 3 down happens, okay? I think that's as far. Do we want to go into hourly? Well, we could, but it's the same thing, just a different look there, okay? That number might be off by 1. There was our trigger with that gain. There's the internal wave count. You can see all of these waves down. These the first and third and fifth have 5 subwaves in parentheses. 1 has 5 subwaves, 3 has 5 subwaves, 5 has 5 subwaves. Subwaves, that tells you that the trend is down, and all the retracements up there at the 786. Okay, let's get into the report because I want to show you guys something interesting here. Let's get into the market close report. Like I said, we published 4 reports today. We had a pre-market, a morning, and an afternoon, and a market close. We'll get into the market close here, get you caught up. There's the next turn date, 11/16, and you can see that looks like the next high for sure if it didn't already happen today. Here are the second waves at 3 degrees of trend, and it's really 4 because I didn't count the B wave. You can see we got a little star here, and this wave 2 in red in parentheses led to a 271 point decline. This wave 2, that's a 786, and that led, I'll have to get that chart out, to a 444 point decline. And now we're at this 2, which is right on the 786. We should see how far that's going to go. And I think I extrapolated that out. I'll just read this here for you guys. I'll always say the market's going to make most of the people lose most of their money most of the time. So if they're going to take it down, what's the best way to do it? Shake out the shorts. 786 retrace, take it down. 786 retrace, get all the shorts to cover, all of their stops wiped out, and take it down. 786 retrace, rinse, repeat. You can see what's going on here, okay? And technically the way to shake out the shorts is to run the retracements up to the 786 level, okay? And we can see those retracements that I just showed you. There's 3 of them at 3 different degrees of trend that did a 786, and it's really 4. 1 up here with the B, 2 up here with the 44.66, and 3 right here at the 11.14 high, okay? So I'm sorry, it's at least 3, not 4. But you can see these, this one was followed by a 271 point drop. The second one here was a 444 point drop, which is roughly a 1.618 multiple of 271. If that repeats itself, which the markets usually do, it should be about a 718 point drop, which would be the 1.618 multiple of the 444 point drop. So we'll see. All these 786 retracements were followed by significant point drops. Okay, and the trend should continue, and we should see this thing go down and take out that wave one low. Okay, again, that gap is above. So I'd allow it another day or two with that 11/16 turn date, which has been pretty accurate. I think we can go back and look at the slippage on this. Again, this is the one that I started from a low. I've been doing these since the late 90s, 1997, I believe. And I always started them from a high because I wanted to find the low of Fibonacci 55 days later. For some reason, I started this one at a low, and you can see the slippage here. None, none, none. There's 1 minute, none, a day, a day, a day. And here we are with 11/16. If it topped on the 14th, it would be 2 days. If it tops tomorrow, it would be 1 day. If it tops on the 16th, it'll be none, a slippage of none. So we'll see how it goes. This move up is complete or nearly so. Here we are with it right here. Okay, I think I may have that. Let me see if I have that picture there. Okay, don't think that's the one I wanted. Let me see here. Forgot that hourly market close. Yeah, there it is there with the points. Yeah, I have those arrows pointing down. That's the same one. Okay, so that's it for today. Wanted to get you guys caught up again, and we'll see what the next couple days bring. Should be very interesting, to say the least. And until next time, take care, everyone.